Your most dangerous trade isn't the one that passes your evaluation. It's the one right after your first payout. Here's how it usually goes. You pass the challenge, you trade clean for a few weeks, you hit your first payout, and it feels like you finally cracked it. Then 1, maybe 2 weeks later, the account is gone. Not because the market did anything strange, because something quiet changed in how you were trading, right at the moment you felt safest. There are 4 reasons this happens, and none of them are about skill. First, house money. That payout doesn't feel like your money anymore. It feels like the firm's. So you risk it in a way you'd never risk your own. Second, size creep. A win quietly gives you permission to size up. One more contract, a slightly wider stop, nothing dramatic until it is. Third, and this one is specific to futures. The floor moved. On a trailing drawdown account, every new equity high drags your liquidation level up with it. After a payout, you're sitting at a new peak, which means you have less room to be wrong than you did on day 1, not more. Most traders feel richer and trade looser, exactly when the math got tighter. On the forex side, it isn't a moving floor. It's the same behavior, just colliding with fixed stops and the account's drawdown limit instead. And fourth, complacency. A clean stretch convinces you the hard part is over. It isn't. It just got quieter. So what's the usual advice? Just be disciplined. Stick to your rules. The problem is, your judgment is worst exactly when your exposure is highest, right after a win, with house money at a new peak. You can't beat a statistical problem with intuition. Discipline is the first thing that bends under that much pressure. The only thing that holds is structure. If the size is fixed before the trade ever happens, there's no decision left to creep. If the rules are hard-coded, the account doesn't know it just won. Trade 200 is sized exactly like trade 1. And if the position is sized against the drawdown floor that actually exists, the trailing one on futures, the fixed limit on forex, then a normal losing run is just a losing run, not a blow-up. That's the whole idea behind what we built. Not a smarter way to predict the market. A way to take the dangerous decisions off the table before you're in the worst state to make them. If you want to see how each strategy is pre-sized against your firm's drawdown, it's all at puravidaedge.com. No predictions, just structure that doesn't care how you feel after a payout.